Hi students, good morning. Welcome again to second unit of financial accounting, that is subsidiary books. Subsidiary books are the books which helpful to the accounting, simple, made very simple. There are n number of transactions are segregated into sales, purchases, and most of the sales, purchases, cash were posted into separate books. Remaining transactions were asked in journal proper. So 90% of the work is being completed without writing journal entries, directly posting into ledger accounts. Those ledger balances were transferred to trial balance. So in that subsidiary books, important or main items are sales book and purchases book. Earlier video also we understood about what exactly the sales book. Sales book records only credit sales. Sales book does not record sale of assets and cash sales. Purchase book record only credit purchases of goods, not purchase of assets or cash purchases. Simultaneously, purchase returns book, sales returns book, and bills receivable book, bills payable book. And there is one important book which is in subsidiary book is cash book. There are two types of transactions, cash transactions and credit transactions. All cash transactions were posted in cash account. All cash transactions were posted in cash account. Cash transactions are cash receipts, cash payments. Receipts are debit, payments are credit. Okay. So in this video, we understand about the cash book. Okay. Before that, we memorize what are the concepts which we learned earlier. Subsidiary books are the original book of entries and also primary records. Primary records. On the basis of these subsidiary books, postings are made into concerned accounts afterwards. Okay. Suppose sales book we are maintaining, the total amount is transferred to sales ledger account. Sales ledger account balance is transferred to trial balance. Okay. So the subsidiary books are the main books or primary records. And after these subsidiary books, balances were transferred to concerned accounts. Advantages. Posting of each entry becomes easy. There is no journal entry for credit sales. Directly we post into sales book. Goods sold to Krishna. As usually we pass journal entry, Krishna account data to sales account. But in sales book, directly we will write with the name Krishna and whatever the goods he purchased. So posting is easy. And type of transactions, one type of transactions are recorded in one book. If you take a day book, all transactions are there. If you take a sales book, only credit sales are recorded. Purchases book, only purchase book, credit purchases are recorded. Okay. Important description about the transaction is also made in the related books. So a lot of information related to the transaction is easily accessible. The goods which we sold, the total details of the goods were mentioned in the sales book. Description of the goods, price of the goods, discount. Okay. Everything is mentioned in that sales book. That's why more information we can put into that sales book. But in journal entry, just we will write narration, goods sold to Krishna for so and so. But in this goods sales book, we will write how many worth goods we sold to him, and quantity, price minus discount. That total information we mention it. Okay, disadvantages may be expensive for the small trade because they have to maintain different books. It requires some basic knowledge for accountancy. Other people doesn't know how to maintain these subsidiary books. That's why specific knowledge like us is required for maintenance of these books. Okay, and look, the subsidiary books are eight are there: purchase book, sales book, purchase return book, sales return book, bills receivable book, bills payable book, cash book, journal proper. Journal proper. It was not written in that journal. So, purchases book used to record only goods purchased on credit, and it is also treated as a invoice book. It is not necessary to record the transactions in the journal book where they are entered in the purchase. Yeah, I already told. If you are opened a purchase book, all credit purchase of goods directly you enter in purchases book. You need not worry to pass then purchase account data to Krishna account journal entry. Later, purchase account to debit side posted to Krishna. That is not right. Directly in the purchase book, simply write Krishna how much quantity he purchased, what is the price, is there any discount is there or not, that you will mention in that. Okay. Then format is date, particulars, invoice, LF number. Sales book is also same. It records only goods sold on credit. Okay. Sales book format. Purchase return book is used to record goods returned to our suppliers. While returning goods, buyer prepares debit note. So we prepare a debit note to and return the goods along with that. Format is same like purchase book, sales book. We receive the returns by the customers and also known as written inwards. And this book is sellers are prepared the credit note. Okay, format. Now we learned about the cash. To record cash transaction, separate book is kept, which is called as cash. Okay. So all the transactions which we made, which the parties, different purchase of different items and receipts, payments, for all those we enter directly in cash book. Directly in cash book. Usually earlier what we are doing, we first pass journal entries, later into ledger account, later we open ledger accounts, and ledger account balances were transferred to trial balance. So now what we are doing, there is no journal entry. There is no journal entry for the cash transactions. Directly we post into cash book. How it will be? All the receipts are debit. All receipts are debit. Suppose look at our problem number. Look the problem number 22. In problem number 22, commence business with cash 30,000. So in problem number 22, we prepared a journal entry. That journal entry cash account data to capital account, and later we have to open a cash ledger account. We have to post to capital. So in this procedure, what we are doing, directly we are writing in cash book debit side to capital. To capital. So we skipped the journal entry for this transaction. Next, paid rent in advance 500. Entry is rent in advance account data to cash account. So cash account is showing credit side. It is a payment. All payments are credit. Credit side we will write buy rent in advance. Purchased goods for cash 15,000 and for credit 10,000. Goods purchased for cash entry is purchase account data to cash account. Cash account is credit. We will go to credit side of cash book. We will write buy purchases. Buy purchases. But this 10,000 credit purchase we have to mention in purchases book. Okay. And received cash from a bad debt written off last year. Cash account data to bad debts written account. Directly we will write debit side of cash book to bad debts written off 100. Okay. Like that. So all cash transactions, we won't write any journal entry for them. We remember journal entry in our mind and we post them into ledger account. So the function of cash book is to keep records of all cash transactions. Main aim of cash book is to record all cash transactions. Cash book is a ledger, a account. Cash book is a ledger and as well as a account. There is no need to prepare ledger account for that. It is a cash book itself is a cash ledger account. Okay. So types of cash books are four. One is a single column cash book, which we usually prepare. Another one is double column cash book, which is along with the discount column and cash column. Triple column cash book, discount, cash, and bank columns. And petty cash book is the used to write small disbursements, either payments or receipts. Simple cash book. Simple cash book is like our T-shaped ledger, date, particular cell of number and amount. Okay. All the cash received are entered in the amount column of the debit side, and all cash paid appear on credit side in amount column. Very simple to remember. All receipts are debit, all payments are credit. All receipts are debit, all payments are credit. Okay. Cash book is closed and balanced at the end of the month. Same as ledgers we prepare from 28 onwards. Problem number 28 to 37 or something. Okay. So we have to close the cash account at the end of the each month. Look at the simple column cash book. Only one amount column is there. Only one amount column is there. Debit side amount column, credit side amount. Okay. Next, coming to the double column cash book. So there are some entries, compound entries are there. More than two accounts are there. In simple to understand, received cash from Raju after discount of 400 rupees 9,600. So we received 9,600 cash account data and there is a loss 400 discount account data to Raju account. So in this, there is also some discount is there that we enter in cash book. Okay. Discount and discount as well as a cash amount. We open a separate column for discount received and discount allowed. Discount allowed is debit and discount received is a credit. Okay. So in double column cash book, one additional column to the amount column is a discount column. Two accounts, cash and discounts, are combined in this book. Discount allowed to the customer represents loss. Discount received from the suppliers is a gain. Losses are debit, discount allowed is debit, and gains are credit, discount received is a credit. Okay. Then format in an additional column, discount column is there. See here. Okay, we will do problems also. in our textbook problems are available. I will explain the solution how to solve the problem. So remember, students, while solving the problem, just we have to remember the journal entry in our mind. According to the journal entry, we post receipts debit, payments credit in cash book. Either column of the cash book, either single, double, or triple column. Next one is the triple column cash book. A cash book with discount and bank columns is triple column cash. Okay. In the triple column cash book, in addition to the discount and cash, one more column is added. That column is called as a bank. Usually, industry or the concern or the organization will deal with the many parties through bank. Through bank. Nowadays, due to ban of demonetization, digital transactions are increased a lot. Digital transactions are increased a lot. As per NPCA, National Payment Corporation of India, okay, there are in a day a crore more than crore transactions are happening through digital. So whatever the amount you paid, it is deducted from your bank account. Whatever the amount you received, it is added to your account. You have an experience with many payment apps. Okay, Paytm, PayPal, PhonePay, Google Pay, many other. You are using more payment apps than us. Okay, you had experience that money is deducted from bank, money is added in your bank. That's why the company is required to maintain separate bank column in their cash book. That's why additional column in addition to discount and cash is added. That is bank column. Okay, look at the format. Discount, cash, bank. Debit, discount amount, bank is a credit. Okay. So next one is a petty cash book. Petty cash book is used to record small amount of expenses like stationery, cleaning, office maintenance, okay, utilities like that, postage, like that. So particulars amount, date particulars amount, either debit and credit. So usually right side we elaborate expenses and debit side we will write only receipt. Then bills receivable book as well as a bills payable book. Bills receivable book is used to record the bills received from the debtors. When a bill is received, details of it are recorded in the bills received. In the ledger account of the person from whom each bill is received is credited with the amount of that. Usually, if the bill is received from Raju, bills receivable accounted are to Raju account. In bills receivable book, we will write Raju, and in Raju account, we will write by bills receivable. Okay, and periodical total of the book is posted to the debit of bills receivable account. In bills receivable book, all the list of bills we received is mentioned, and the consolidated amount we post into bills receivable ledger account, debit side of bills receivable ledger account. Okay, and this is the format for bills receivable book. Okay, and bills payable book. Bills payable book is used to record bills accepted by us. Usually, we bought goods from suppliers. Suppliers supply raw material to us. Instead of payment, we postpone the payment. For that purpose, we accept a bill. So we record the bills which we accepted. That bill the book is called as bills payable book. Bills payable book. So this is entered In the ledger, the account of each person whose bill has been accepted is debited with the amount of the bill. The total of the bills accepted is credited to the bills payable ledger. Okay. Then the format is same. Okay. Right. So which is not the one type of the subsidiary book. Find out. You had an answer, I think. Okay. What is the answer? Four column cash. Bills receivable book is there. Bills payable book is there. Triple column cash book. But we don't have any four column cash book. And how many types of cash books we have discussed? How many types? Single column, double column, triple column, petty cash. How many? Four columns. Okay. Next, how many columns a simple cash book is having? Find out and record that. Date, particular self number, amount, debit side, and credit side. You look at the format and tick the answer. Okay, which type of subsidiary book is contains outward invoice number? Outward invoice number. Outward invoice number. Which type of subsidiary book contains outward invoice number column? Can you find that one? Outward invoice column book. Look at that. Which book? Sales book is having outward invoice number. Sales book. Answer is a sales book. Recognize the format. Date, particular self number, credit note is for sales return book. Which book is also known as invoice book, sales book? Which book is used for recording goods returned to the seller who sold goods? That may be. Find that book. In which book small expenses are recorded? Answer is petty cash book. Okay. Any doubts you can write. Come with the consultant in WhatsApp in our group. Okay, students, next video I will explain the problems. Directly cash book, later subsidiary books. Before that, you please take a photo or xerox of our problems from our textbook, Financial Accounting 1. Okay, students, bye.